This is Matthew Cratter from Trader University, and today I want to talk about how Bitcoin can get to $318,000 by next year. Now, this is not my idea. This is actually in a research note from Citibank. So we're going to talk about that in a minute. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. So at the same time that I'm still getting tons of emails from people and tons of comments saying I'm not buying Bitcoin because the government's going to ban it, at the same time that's happening, all of the Wall Street investment banks, all the really big financial institutions in the US are getting on board Bitcoin. And I'm telling you, they're getting together to pump this thing like you've never seen anything pumped. Tom Fitzpatrick here at Citibank talking about how Bitcoin is like 21st century gold. This is a note that's just intended for institutional investors. So the normal groups that would receive this would be hedge funds and groups like that. But I will link to this tweet by Alex at Classic Macro that talks about how Fitzpatrick sees Bitcoin getting to that price. Now, this agrees. It's fairly close to the target that Plan B has in his stock-to-flow cross-asset model. He has Bitcoin hitting 288,000 sometime between 2020 and 2024. So what's really extraordinary about this run, we've really run from about 11,000 to over $17,000 per Bitcoin this morning. What's really extraordinary is there hasn't been retail interest, or at least not a whole lot of it. This is the peak when Bitcoin peaked at 20,000 back at the end of 2017. What I'm looking at here is Google Trends, basically people searching for Bitcoin, and it's a way of gauging sort of retail mom and pop interest in Bitcoin. We have a small uptick happening here, but it's nothing even like what happened at the end of last year or this summer. And so the Robinhoods of the world, the mom and pop investors, the real retail FOMO hasn't even started yet. That's the unbelievable thing. But what is happening is there is a gold rush happening on Wall Street. And we're lucky here at Trader University. We've been talking about this for months. We knew this was coming. A lot of you are on board. I have a very large position in Bitcoin as well, as you all know. This is what's happening right now. There's a great tweet here from Pierre Rochard, who's a very famous Bitcoiner. Lawyers are scrambling to file Bitcoin amendments with the SEC. Institutional investors are here, and they want to buy your Bitcoin. Don't sell. And he's tweeting in response to a tweet from Kevin Rook. On Friday, Skybridge Capital filed an amendment with the SEC allowing their $3.6 billion fund to start investing in Bitcoin. So these are hedge funds and other big institutional investors that are trying to get permission from the SEC to invest in Bitcoin. So this is coming. This is when these research notes go out to hedge funds, they will read this, and it'll definitely bring more people on board who aren't already on board. Cuppy has a great, who's also a hedge fund manager that I follow on Twitter, has a really interesting tweet here talking about how this was yesterday. 3,300 Bitcoin were added to the Grayscale Bitcoin Trust, the GBTC. That is, as he calculates it, about 4 or 5 basis points of the free float. A basis point is just 1/100th of a percentage. And what he's talking about here is just the tightness in supply of Bitcoin. A lot of this is caused by the halving, which happened in May 2020. So miners are producing fewer Bitcoin every 10 minutes. And also there are now so many hodlers who buy Bitcoin, take it off the exchange, put it on a hardware wallet, stick it into cold storage, and it disappears forever. There are billionaires doing this, like Michael Saylor. He's doing it with his company, MicroStrategy. He's doing it with his own money as well. I'll also link to Cuppy's latest article here on his blog. Now, Cuppy is not a fan of Bitcoin. He thinks the whole thing is just a Ponzi scheme, and he's more of a value investor type. But what's extraordinary is that he's very much on board. He says he has a max position size on this. Very cynically done, I suppose. But nevertheless, he's extremely bullish on Bitcoin. He does another interesting calculation here about how much Grayscale has been hoovering up from the end of July through Friday, November 13th, they've grown 125 million shares have been added to their trust. So that's equivalent to about 119,000 Bitcoin purchased by Grayscale during that period of time. And this is out of a free float. He calculates the free float as being somewhere between 6 and 8 million coins. These are coins that have not been lost and have not been locked up, but sort of trade back and forth. So in this really short period of time, over just a couple of months from the end of July through mid-October, just Grayscale purchased between 1.5% and 2% of the free float of Bitcoin. Now, what's also interesting, he points out that he agrees that Wall Street is getting behind this big trend, and he's got a great phrase in here. Do you think Fidelity is launching their new Bitcoin vehicle without a substantial marketing campaign? So people who aren't buying Bitcoin because they think the US government's going to ban it don't understand that when all of Wall Street is on board with something and it's just at the beginning of pumping something, that's not when something gets banned. Maybe if this thing blows up and goes terribly wrong. But before that happens, we're going to see 100,000, 200,000, 300,000 on Bitcoin. So I really like what Pierre Rochard says. Don't sell to these institutional investors. This is really going to be the first huge Wall Street trend that retail investors were able to get on before and basically front run the institutional investors and front run the billionaires. And that makes me very happy to see. Now, we are beginning to see the gold rush on the retail side as well, even though Google Trends is not showing FOMO in terms of Bitcoin searches. It looks like PayPal's seeing just unbelievable demand for people wanting to buy crypto, presumably mainly Bitcoin, through the new PayPal wallets. And this has now been rolled out to all PayPal accounts, all eligible PayPal accounts in the US. I just checked my PayPal account and it looks like it's been enabled. I'm not going to buy it in PayPal, any Bitcoin in PayPal, simply because the fees are too high and you also cannot withdraw the Bitcoin. You have to keep it there at PayPal. But nevertheless, this will be a good introduction for many people to Bitcoin. Once they see that PayPal has legitimized it, they're going to think less that it's some crazy magic internet money or a vehicle for laundering money when you have all these mainstream institutions jumping on board. Pierre Rochard had another good tweet 12 hours ago, and I think this is apropos of our discussion of Bitcoin Cash yesterday and talking about how scalable Bitcoin is versus other cryptocurrencies. And what I've argued is that even though the number of transactions is limited and will be limited in terms of how many transactions per second or per minute or per 10-minute block, the value of those transactions is infinitely scalable. So here was a block that was printed. This is a block in the Bitcoin blockchain that was printed, I believe, yesterday. And we can see that the value was $2.6 billion worth of value in this single block on Bitcoin. So this shows that not only can Bitcoin scale, but it's got the liquidity and it's got the market cap. It's got all these large things that institutional investors need enabled in order to participate. And that's why institutional investors are not going to be buying Bitcoin Cash or BSV or Bitcoin Cash ABC or XRP or anything like that. They're not decentralized. They don't scale in the same way, and they don't have the same liquidity. Plan B points out that in the bull runs of 2013 and 2017, there were a number of months where we had monthly returns in excess of 50 or 60%. And it seems very likely that that is going to happen again in this bull run. Maybe it's even a little bit muted. I don't think so because of all this institutional money, but even a muted monthly return would be something like 30, 40, or 50% in just 1 month for Bitcoin. So those of you who think the bull run is over and that you've missed out on Bitcoin, it's actually just getting started, believe it or not. The reason we know it's just getting started is because Wall Street's just getting on board now and beginning their pump. That doesn't stop the naysayers. I just couldn't resist quoting Peter Schiff again. The recent rise in Bitcoin relative to gold in no way proves that Bitcoin is a superior store of value. He basically talks about Bitcoin as being a risk-on trade and as a an overvalued bubble. This is funny because Peter Schiff has been calling Bitcoin a bubble since this is an article from 2013 from CNBC. Bitcoin had just risen from $13.50 to $375 back in 2013. And he was saying that the Winklevoss twins, who are early allies of Mark Zuckerberg before they had their falling out at Facebook and at Harvard, but basically Peter Schiff saying that Bitcoin is a bubble, it's a tulip. This is back in 2013. And he's still saying this, comparing the return on Bitcoin to the return on gold is irrelevant, as Bitcoin and gold have nothing in common. He doesn't see that they're both stores of value. And he also still thinks that Tesla is in a bubble. These are the kind of people you want to avoid listening to because they're literally dangerous to your wealth. He's been bearish on Bitcoin since it was 10 or 11 or 12 or $13. And he's been bearish on Tesla as well. And so I thought this was pretty funny. And then someone also did a time lapse of what Peter Schiff will look like when Bitcoin hits $1 million and gold is still stuck at $1,700. Now I think gold's going to do a little bit better than this, but Bitcoin is definitely taking market share from gold. And we've learned actually in the past few weeks that central banks, for some reason on net, have even been selling gold. I don't know if they're accumulating Bitcoin, but that would be very interesting to follow. Also wanted to share with you, I can't remember if I've shared this before, casebitcoin.com, C-A-S-E bitcoin.com. Very interesting metrics here to follow. In addition to some interesting articles, if you scroll down, it has the 1 year and the 2 year returns for Bitcoin. So I guess these are trailing 12-month returns because I know Bitcoin's up more than 100% this year, but trailing return of 99% this year versus gold up 28% and the S&P up just 15%. And then I really like what they have over here, Bitcoin price closing level over time. And we can see that at the current levels, Bitcoin's currently at 16,991. As I'm recording this, there have only been 6 days when Bitcoin has closed above this level, much less than 1% of Bitcoin's life. So this tells you what everyone can tell by looking at a chart. Bitcoin is about to hit new all-time highs here, but it's never spent this much time above these levels in the past. It briefly spiked up to 20,000 in December of 2017, but it didn't spend a whole lot of time up there. And the fact that we're sustaining at these really high levels at 16,000, 17,000 is very, very constructive and encouraging. I want to end with a moral here. You don't want to be this person who wrote this editorial, Elizabeth Anderson, saying she basically jumped into Bitcoin, doubled her money, and now wants to know, where should I invest my cryptocurrency rewards? She should probably say her Bitcoin rewards, because she didn't make the money in Bitcoin Cash, that's for sure. But the whole point of Bitcoin is that that's where you should store your wealth. She basically put some of her wealth into Bitcoin, doubled that amount of wealth, and now she's pulling it out and looking for somewhere else to invest it. The whole point of Bitcoin is it's a store of value. And once you've made your money, you stick it in there and you keep it in there for as long as possible and let it compound. Michael Saylor just has a great quote. He's a very, very poetic guy in addition to being a billionaire and a genius, both when it comes to software and Bitcoin. His quote, "Bitcoin is not a currency, nor is it a payment network." And this is to stand in contrast to the people who say that Bitcoin has failed Satoshi's original vision. Bitcoin is not a payment network, though it is. It's a very useful way of sending money over long distances, across borders, etc. I like this metaphor, though. It is a bank in cyberspace run by incorruptible software, offering a global, affordable, simple, and secure savings account. This is what Elizabeth Anderson is missing, that she just pulled her money out of the best savings account ever and is looking for somewhere else to put it, and all the other alternatives at this point are inferior. A simple and secure savings account to billions of people that don't have the option or desire to run their own hedge fund. So great way to end, I think, with Michael Saylor. Think about Bitcoin as a bank in cyberspace. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell so that you can be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.